So today got a bit of a shorter video for you guys. We're going to talk about the current rally in the market as the rally continues. Once again, it's been a fantastic year in the stock market, and I'll tell you something, I do not mind making these videos talking about how good the market's been and the rally in the market at the moment. I don't mind it at all, because honestly, for me, that's stuck on this YouTube scene for the last 2 years when we've had this awful bear market, and I had to stay here going, I know it's awful. It might continue to be awful. I don't know when the bottom is, but we will get a bottom. And you see all these stocks at historic valuations. I know as long as you can get the right stocks, that there's going to be money to be made here, and it will get better. It will get better from here. And now that we're kind of moving out that situation, I enjoy making these videos a lot more. There's a point where every day you're coming onto the YouTube scene and you're having to say, I know this is awful. And me, myself, I'm having to do that every single day for 2 years. And now I can come on and make these videos going, it's great out there, isn't it? It's so much better. And I will continue to make these videos because honestly, I stuck through that pain with you guys for the last kind of 2 years. And now, you know, when everyone was bearish on it, you know, no one wanted to kind of go, actually everything will be all right. You know, all these YouTubers disappeared off the YouTube scene. And to make these videos now talking about the rally in the market, it's so much better. So when I do get the opportunities to make these videos, I am going to make them. And once again, we're having another good day in the market. Obviously not a huge day. I mean, the S&P is up around 0.3%. But what it has meant is that once again, you know, the last kind of this last month has been once again really good. Last 6 months has been very good. And the rebound that we've had in the last year has been excellent. And that does mean that we are very close now to breaking all-time highs on the S&P 500. So that's something to watch. We are currently at 4,617, and the actual high, I believe, was exactly on the last trading day of 2021 when it did close at 4,766. So that does mean we are only 3% off all-time highs now. So it looks like we're going to look at the market, probably in my opinion, going to look at a reason to justify going higher now. I think that's what it's going to be looking at. I think it's going to be looking at key data this week that's going to come out that potentially is a reason to push it up, and I'll share that with you guys. The S&P 600, more importantly, is outperforming the S&P 500, which is hopefully what's going to continue to happen. It's the reason why I bought it, is that I believe that the small caps are undervalued, and people will look at the big caps and go, why buy that nearly all-time highs when I can go get the S&P 600 that is still not at all-time highs? It's still a fair bit down, 15% down, and the valuation is nearly half of what the S&P 500 is. So once again, that's really good to see that that's outperforming. That's what we want to see a little bit more. But also on the side note, I mean, we talk about HIMS. You know, this has had a good year. Obviously, was up a little bit higher at the time. I remember selling this out in May for 100% profit, but the rally has been coming back on in the last kind of couple of months, and even year to date, it's up 38%, which isn't too bad, which is not too far off the S&P 500's performance. Actually, it's nearly double. So once again, you can see a clear reason why I personally really beaten the S&P 500 this year. Even Hims and Hers has done really well. But I mean, DraftKings obviously has been a really big helper. But one stock I never really talk about is Mercado Libre. I mean, this stock in the last month alone has been on an insane run, and I remember during the time where there was a little bit of a dip in this stock, and I think it was about July. Yeah, you see that little drop there? The stock literally dropped 12% on a downgrade by an analyst, and it's like, that's crazy. And I remember selling, that was the first time I sold some DraftKings shares. I got to break even on DraftKings, and I thought, okay, it's a good time to start rebalancing that position because it's one that I bought heavy, and I got to break even, so I sold some of that out, and I thought, you know what, Mercado Libre, I want to make a top 5 position, and the one ways that I would do that is to put that money into Mercado Libre, you know, start building that up more and more, and what a decision that was, you know, as not only Hims and Hers smashing, not only DraftKings smashing it, one of my other large positions is Mercado Libre that's been performing really well going forward. But obviously all the kind of stocks that I've been rotating to have done very well, which has been very good. I rotated from a bad position in the likes of 2021 into 2022 and rotated into some really good stocks, and the portfolio is looking really good now. And I've been trying to now look at the next opportunities, you know, in 2024, what are going to be the opportunities for me to make money in the stock market. Now, I thought Etsy was going to be one of them. Unfortunately, this one has been on a massive tear recently. Since I hardly ever do it, but I actually bought the bottom of a stock, which is unbelievable. And this has been on a rally since I bought it. And Etsy was one that I was hoping to buy into a decent position, but that's gone on a bit of a rally. But what I would say is the theme for the stocks with the opportunities at the moment, in my opinion, is the stocks that had the big CV boom. So Etsy was the big CV boom, and that had this had a poor year. I mean, even still today, even though I'm up on this position quite a bit because I managed to catch the bottom, the stock is still down 25% year to date. And this is one of the stocks that had a big CV boom. Another stock that is one that I would say is an interesting opportunity. It's having a good day today, actually, though. Fiverr up 2% today. But I mean, year to date, this stock hasn't done anything. It's not really joined in the rally and was a CV booming stock. Look at the highs of where it was in CV times. And I look at this one now and seeing the company really starting to move in the right direction. They have. They've got the quarterly financials here. So revenue back up at 12%. If you look at net income as well is up 126%. Net profit margin up 123%. EPS positive EPS as well. So from a financial point of view, this is one that's really starting to kick on. But yet it still seems to be stuck in the dumps because of the CV days, and I wonder if finally after 3 years this is a stock that can kind of come back after its big slump since the CV crazy valuations and all that demand pull forward. And maybe these are the stocks that are the opportunities in 2024. I mean, Zoom, once again, exactly the same. Big benefiter of the CV situation, and the share price is basically where it was at during the pre-CV, but you look at all the numbers, the revenue's up, the users are up, most of the profitability is up on most of these companies. Look at the financials. I mean, 3% growth needs to be better, but it's still growing. It's back to growth. Net income is up 192%, and you're looking at something like a Zoom potentially. Could this be an opportunity? DocuSign, once again, another big benefit of the CV situation, but yet the shares haven't really done much. Year to date, this stock is down 7%. Financially, though, it's growing revenue. Net income is up once again, beating EPS, beating on the revenue point of view. Is this an opportunity? And that's what I'm starting to see as... I've got another one. I've actually got one more on here. Datadog. Not as bad as the other ones, this one. But the numbers are a lot stronger. So if you look at the revenue, for example, it's 25% and net income. So that's a little bit different because the numbers have been better with Datadog. And if you actually look at year to date, it's actually up 59% today, but it's still not as high as where it was in 2021. Not using that as a valuation metric, saying, oh, look, it's not as high, but could that be an opportunity? So yeah, I'm wondering if those are the opportunities really to be looking at in 2024 now that a lot of these stocks are kind of rallying up. But I guess really, what is the reason for the catalyst for the S&P 500 to break to new highs? What would be the catalyst? And I think we've got it this week. I always said that for us to break to new highs or have a rally, we need to see inflation come down, which we have seen at the moment. And the big thing is the Fed. We've got to see the Fed start pausing. Until we see the Fed pause, we won't get the rally in the market. And the sentiment is that they have paused. That's what everyone's thinking. The people are thinking the Fed have now paused. Now, if they do pause, this is where the rally will continue. If they don't pause, or if they keep saying that they're going to potentially increase interest rates, that's where people get a little bit like, oh, I'm not sure if I want to buy. So that's what's going to be the big catalyst for the stock market to continue this rally and continue the rally into 2024. Now, the inflation data has been okay. We've continued to go lower. Obviously, now we're at 3.2%. It's quite hard for it to drop a lot more than at the speed that we have been doing. But we are expected to go to 3.1%. I don't know. I think we could see a bigger drop than that. We'll see what happens. Obviously, it'd be great to get to the 2% by the end of the year. And if you look at core, this is where maybe the Fed get a little bit more nervous. They potentially look at the core a little bit more serious. And should that's expected to stay flat, which obviously isn't great. We want to keep seeing the market keep it moving downwards. And if it does start to slow, then maybe the Fed start getting really like, oh, we can't get that last little bit just to drop down to the 2% target. So that's something to bear in mind. I mean, the other thing as well is like When you look at true inflation, even true inflation has had a bit of a bump up recently, and that has pushed back up to the 3% range, which is the thing that is making me a little bit nervous with the inflation data. On a positive note though, is when you look at oil's going totally in the other direction. So oil keeps going down. We saw the oil have the increase in October, but through October we saw the oil go down in November, and then obviously through November we've seen it go from about $80 a barrel. We've seen it all the way down to 70. We are currently sitting at $71. So I mean, if we can hold this through December, that for me will be the tipping point where we will see the 2% inflation target in January. So we'll see if it holds it out. So that's the good news. There's bad news, there's good news. But the big thing is that it doesn't matter, because the big thing is going to be the Fed. Now, the expectation is for it to hold once again, which would break what the Fed said, which was they said they got one more increase. So I think this is a big point here. If they do hold on this one, when they do meet on the 13th, on the Wednesday, if they do hold, I think that is the indication that they are done increasing interest rates. And obviously, as we know, the big thing is that, like the UK, for example, will follow the US's lead and they will hold as well. So this would be go against what the Fed have said, and I think that would be the indication that they hold. Obviously, if they do increase, that'll be the big surprise. Like, whoa, like you'll see the markets absolutely tumble. So, but I think they'll hold, and I think that will be the indication that they are done with the interest rates. Now, the big thing that everyone will be looking at, and this what will probably move the markets on Wednesday when the inflation data does come out, is you see this little star here. Meeting associated with summary of economic projections. Now that's the key bit that everyone's going to be looking at on Wednesday. The reason why is because everybody will be looking at the Fed's data of how they expect the economy to do next year, and probably the more important bit is people will look and see what they are expecting on interest rates. And everybody will be looking to see if they plan to hold interest rates steady, if they are planning to increase interest rates, or if they're going to do what the market is expecting, which is 2 cuts at the back end of the year. Now, I think 2 cuts by the end of the year would make sense. I think that is the right thing to do. I don't think the Fed are going to put it in it. I don't think the Fed will put that in, because obviously then they don't want to get backed into the corner. So I think that potentially they will either suggest no more hikes or potentially a hike. Now, unfortunately, I do think when we do get to that on Wednesday, that will mean that we will see a drop in the market on Wednesday. That is my opinion, and that is my opinion on what the Fed will say. What they'll do is a total different thing. But obviously, this isn't important as a long-term investor. If you got caught up on what the Fed were doing in the last 12 months, obviously you would have missed the market. Overall, my big thing is that you want to be in the market, and if we do see this economy hold up and interest rates stay the same, I think we will have a good year, and in the longer term, you will benefit rather than getting caught up on these short-term issues or things, just to ignore it all and focus on the long term. And in the longer term, I think the main thing is that you carry on holding high quality companies, and you'll do well. But I do like to mention it because it makes sense why things are moving in the short term. But in the longer term, you want to be definitely positioning yourself for the longer term and not looking at, is Etsy stock going to go down 5%? So do I need to maybe sell this? You don't want to get caught into that. It might happen, and I think that we might see that sort of situation on Wednesday. But the big thing is still position yourself for the longer term, and hopefully you'll do very well. So a few things there. Obviously recapping the markets, some stocks to watch, and also what will potentially happen with inflation and the Fed, and potentially why I think the market might have a little bit of a wobble this week, but we'll see what happens. At the end of the day, it won't change me holding some of these stocks for the longer term, for the next 3, 4, 5, 10 years maybe. So hope you enjoyed the video anyway, guys. I'll see you in a bit.